Go ahead and share the stream. Copy link. Send it over to Telegram. Whatever. And then we are going to be good. I gotta make an intro for these live streams. And for some reason, I haven't gotten my chat to work this whole week, so I haven't been able to interact with y'all guys on the chat either. So a couple of things that we're gonna have to go going forward, some improvements that we'll make to the stream to make it, more immersive, more dynamic. All right. So let's talk about, well, let's see, it's about 9 o'clock. So let's take a look and see how this previous 4-hour candle closed. It should have closed as a bearish candle. Yeah, so we got a bearish candle at a rejection. A good sign that price could in fact flip to the downside. We could look to take potential sell moves to the downside here for price to push down steeper. I gotta excuse me. We got to be aware on the fact that this wave that we're currently in is in fact on the 4-hour time frame a bullish wave. So you do have your bullish change of character there. We broke through some key levels. We have a resistance at this level here. So let's go ahead and put this resistance up at these lows. So we have resistance at this level. So we can see a flip from this level for a steeper move to the downside. As we know, the larger time frame within this wave has been to the downside there. But what I will be looking to take is a corrective trade just coming off of the 4-hour volume from this previous 4-hour. So let's take a look here on the smaller time frame. Where can we look to potentially scale for an entry? All right, we just got a low broken through here with these lows being taken out on the 15-minute time frame. So let me just do this. So I normally don't utilize trend lines, but this is just to indicate that price has been creating higher highs and higher lows. What we've seen here is we had a higher low to just get broken out of. So price was creating higher highs, higher lows. We broke up this morning. We came back down, corrected, had an impulsive move up. I actually wanted to see get an entry, and I didn't take the entry. And hindsight is always 20/20, but I didn't take the entry because I wanted to wait for this current 4-hour candle to close before the entry. But early this morning, I'm talking to my brother about it, and this will be something that we will discuss on and look for ways to improve, because I was in fact waiting for the 4-hour candle to close before taking my entry. But when price broke through this high up here, so let me just show you real quick. When we broke through this high up here, price pushed up, broke through this high. I said I wanted to see a retest of the 5-minute level of demand. That was this bullish candle here. This bullish candle was the starting candle that started the push for the break of that high. I wanted to take an entry after we get our first bullish candle on a smaller time frame within this area. If you take a look on the 1-minute time frame, let's refine this down. Price comes down into this level. Even if we took it on this bullish candle here, which would have been likely the entry that I would have taken, a stops below this low, which is our key low right here, and then a target back up to the high is an easy trade, a very, very simple trade. And this is the trade that I was saying that I was going to take and didn't take it simply because the 4-hour candle hadn't closed. So what I'm going to do for me personally, just going forward, so that we can actually execute on that, is if it's not after the 4-hour candle, then I'll take this same trade but at a reduced risk. So I'll enter the trade knowing that it is a higher risk trade in terms of it's before the 4-hour candle closes, and we had PMI data being released. So we had some news that is why we're starting to see this drop, or we saw this drop to the downside, shall I say. And we just took out liquidity below these lows here. and I want to see if we can get a correction and then a continuation to the downside. So where would I look to take entries? We just had so much volume that, at anywhere within this area, as long as price, couple things. So there's a couple of things. As long as price doesn't break this high was likely a liquidity grab. So it's not likely that we even go up to this high anyways. But generally, rule of thumb for the 4-hour time frame, we would want to see price. We would want to enter in on price as it's forming its top wick, which we anticipate this to be a top wick, being as we just closed bearish, rejecting off of a key resistance at our session time. It's likely that this current 4-hour candle flips bearish. So what am I looking for? Is I'm looking for my potential entry for that continued bearish move. You can see that we have our change of character. Price created a high, created a higher low, created a higher high, broke through that key low there. Now we're starting to get a correction, and I want to see a bearish move to the downside. But as of right now, I'm not seeing any clear and concise area where we could look to see some type of resistance. We have resistance at the current area that we're at. Now we have to note that this is a high impulsive or a high volume move. So what is likely of those high volume moves that you get a retest instead of that demand play that we were talking about on Monday. Now I'm not saying that that's what we're going to get, but that's generally typically what you would see. So I would love to see a full-on corrective structure. My best trade, my perfect trade would be if we can see price pull all the way back up into these levels up here. This is where I would want to take my sell position entry, looking for something along the lines of this trade here. We'll set a stops above the 4-hour high and look to target the 4-hour low, looking about a 1 to 3 risk to reward on that trade. Being that we get that move, that is the highest probability move, the best entry, shall I say, location. But we have so much volume coming off that 4-hour time frame that price might not push all the way back up here. So if that's the case, then where would I look to get my entry in? Well, I would have to get my entry based on the smaller time frame structure. So once this structure here forms a change of character, you can see we're in now a relatively bullish wave. We got a high, a new higher low, a new higher high. And so as long as this stays in a bullish structure, we can see that continuation back up. But if price goes on to break and create a lower low and lower high, so we get a change of character, price pushes up, pushes down, pushes up, pushes down, retests this key level of demand here and shows a bearish sign, then I'll look to take entry, still targeting that low to be a smaller time frame target. Because we don't have any really clear levels where price could react off of. We have a level here that we could see that correction and retest from. There that price could go, and then from there, change of character will scale in. But the premium zone, I like to focus on premium zones, just like with what this morning's trade should have been. And last night during the agent session, we didn't have anything major. I had a trade set up that looked good. It was only going to give a 1 to 1.3 risk to reward, and it was just so low and slow volume that it wasn't worth it to me to take the trade, based on a couple things. And I'll break it down here shortly, that trade, since we got some time to wait here for EUR USD. And like we said yesterday, the best times to take your trades for EUR USD, generally speaking, is at like 10 o'clock in the morning and 9 o'clock at night. So if we go back to yesterday, what happened at 10 o'clock? What did happen at 10 o'clock? Boom. So we were in that sell position yesterday that we shouldn't have been in, because we talked about it. We broke it down. We reviewed it. Price had created a change of character, broke out of this downward structure on the smaller time frame, came up, pushed up, and then it corrected back down. What it didn't do is it didn't break this low here. So price came up, created a high, lower high, higher high, came back down, did not break this low here, and then price continued bullish. What time did it go? 9:55. 10 o'clock. That 10 o'clock candle, no bottom wick, immediate volume to break through the key 4-hour high, which was, I believe, right here. So this was the key 4-hour high. And why was this the key 4-hour high? We'll go to the 4-hour time frame. We'll talk about it. Let's go here. Okay, you see on the 4-hour time frame, price was creating lower lows and lower highs. So we got a low created, lower high, or yeah, a low created, a lower high, lower low, lower high, lower low. This was the start of this move that broke for this previous low, making this our key high. What do we see happen after we hit our key high? Price pushed up, it corrected back down. What do we talk about? We talked about this Monday, Tuesday. We talked about this almost every day we've been here. This is a high impulsive move to the upside. What do you see generally when we get a high impulsive move to the upside? You get a shallow break and a retest play, or not a shallow break. You get generally a full break, but you get that retest play. High volume equals retest play. Why is it? We talked about it on Tuesday. We talked about it on Wednesday, because price is trying to go up. It pushes up with a lot of volume. It has to form some type of retest because price can't just go up perfectly, but it does a low and slow retest, and it retests to the first immediate level that price can go to, and then you start to see that continuation of that move to the upside. So that is essentially a retest play. And why I didn't want to take the trade that I seen yesterday was because we had this 4-hour candle close bearish, this 4-hour candle close bearish. This was the 4-hour candle that I would have been looking to trade at the top up here. Price respecting the previous 4-hour, and just look for that previous 4-hour candle low to get broken. But the structure was just so wonky. Like, if you look at this right here, this doesn't look good, you know? It doesn't look good at all. There was a couple of things that kind of invalidated that we would get this steeper move to the downside. One being price not breaking through this low here. So we had the start of our candle here. We got a correction back up. You know what I'm saying? But price didn't break through this low. I didn't really like the way that looked, and I would have had to get in on the top wick of this candle here, which would have resulted in this being my entry on the 5 minute. So short position on the 5 minute after price, because this is our previous 4-hour high. You got to remember that that's the previous 4-hour high. So that's our stop loss right there. And price was only going to give me, and I was only looking for price to go here, like a 1 to 1.3 risk to reward. And though it would have pushed down eventually, it wouldn't have happened in my session time. So I was looking to take a trade, you know, at that 9 p.m. area. 9 p.m. is about right here. 9 p.m. is 2100. So 2100 is right here. So this is 9 p.m., the start of the new 4-hour candle. You want to get in at that top wick. The previous 2 4-hour candles closed bearish. I wanted to see that move to the downside just to target that low right there. But price did in fact do it. It just was low and slow, and I was well asleep by the time take profit would have been hit. And a 1 to 1.2, shall I say, risk to reward is just not worth it in that term of, you know, that current structure. But okay, so look, this is what I was talking about as far as that shallow break. We get a shallow break. We got a lot of volume in the markets right now. Price does not have to push all the way back up to these highs. And this is kind of what I meant in terms of this is a good rejection candle there. Now, the smaller time frame structure still remains to be. Oh, no. It's forming a change of character now. So let's take a look at this 1 minute time frame. Price did break through this level here. It hasn't quite pushed to resistance. It did form some smaller time frame change of character. Not really too inclined on taking this move to the downside here. It broke through this low, but I would likely rather see some change of character at this level here. And like I said, my premium trade, my best trade, and what do we? Okay. There's a couple of things that I gotta note before this move happens, because 9 times out of 10, this is what we're gonna see. We have an impulsive move down. It only took a couple candles to push down. We broke through this low, forming a change of character. We already are at a larger time frame resistance. If we go to the 4-hour, you can see it. Price is rejecting and respecting off of these levels here. You can see. Why? And how do I know that price is respecting and rejecting off of these levels? Well, it pushed up impulsively, and then it came back down and closed bearish under these levels here. You see that? It closed bearish under this level. So price is in fact rejecting off of this level. And then, as indicated by the smaller time frame, we do have in fact a change of character that's formed on this smaller time frame that we can anticipate price to go to the downside. Previous 4-hour closed bearish. These are all good signs. My premium zone, my dime entry would be up here. You see we got resistance on a smaller time frame, 1 minute time frame there, but the dime entry, the premium entry is up here. So I am actually going to just wait for just this premium entry. Why? Because it's that best high probability chance trade. And I just like taking the high probability chance trade at a safe bet, you know, being that I don't put stops above my this high, or being that I don't put stops above the candle close that taps into this level, we can anticipate a 1 to 2.6, you know, 1.262 risk to reward, like so a little over a 1 to 2. And that'll be worth it for me to just wait for that. We get a steep top wick and then a continuation down. And realistically, even breaking through this low is plausible. Price can come back down. It can tap into this level here, or it can come back down into this level of demand. Either way it goes, essentially this is what I'm looking for. I want to see a sell move coming off of that previous 4-hour candle and off of this high impact, high volume news. I just want to see that sell move down. So what we could be seeing right here is the top wick for this current 4-hour candle. And as long as this high up here isn't broken, this still remains in a bearish structure. And why is that? Well, on the 15 minutes, let's go down to the 5-minute time frame. On 5-minute time frame, this is our key high. If this in fact is a true change of character, we got a shallow break here, which generally is, shallow breaks generally give you that demand zone retest. A full-on break, high volume, full-on break, candles close below the previous low, then you generally get some type of retest play that we seen on the 4-hour happen from yesterday. We had a high volume move during the New York session. We got that retest play, even though this candle did in fact push back down into this area here steeper, but it came back up, closed above this level, came back down. These candles retested, closed bearish at this level, and then you got an impulsive move for the London session for that continuation. So essentially we have an impulsive move, a corrective structure move, because this is low and slow volume. It's likely that we can get some type of flip. Where could we see that flip? I want to see it up here. So that's it. I mean, and it could flip off of this current 15, but this wouldn't be worth the risk to take this trade and having to have a stop loss like this just for when for price to come here, or potentially to break through this low and come back into these levels of demand based on that I believe that 4-hour time frame we're looking at here. So coming into that level of demand, yeah, I've been having early mornings, so I've been tired this week. I woke up every day this week before 5 a.m. Generally up at like 4. Okay, my alarm goes off at 4 a.m., but I don't generally get up to about 4:30. So about 4:30, I get up, I'll read the Bible, and then 5 a.m. go to the gym, come back here around 6:30, eat a little something, and then work on content or some way, shape, or form, whether that's scripting videos, reviewing, the trades from the day before, because that's essentially what the new model is going to be. I talked a little bit about yesterday, but I'm essentially just going to document every single trade that I take, and it's going to make a video, a cinematic, quote unquote cinematic, because what is cinematic? Trading video. That's all I want to do, is to document this journey in a way that people can both start to understand from the trades that I take and how to trade in the markets, and you'll be able to learn from the mistakes I make too. It won't be just how a lot of traders, because a lot of traders in the industry, they only post the positives. And don't get me wrong, when you post positives like that, it's good in terms of a business standpoint, but it doesn't replicate the realities of trading. And then it creates this level, or this standard, I guess you can say, that you think trading is. You just think people are just winning. And don't get me wrong, there's a lot of profitable traders out there, but in terms of posting negatives, or when you're down, or where you make a mistake and things like that, that's generally harder to do, because then you have people who can say you don't know what you're doing, yada yada yada, blase. I really don't care about none of that. At the end of the day, I know that I can trade. I know how the markets work. You know what I'm saying? I'm not perfect, so I make some mistakes. Yesterday, we took a trade that we shouldn't have been in, and we should have actually been in a buy. We can review it here. Price had closed bullish. So I wanted to see a sell move down for a continuation down. But, and this would have worked out had this candle right here not closed bullish. If this candle closes bearish, we likely see the next candle form a top wick and fill this wick to the downside, breaking this low, and you can see this continuation to the downside. My mistake yesterday was not identifying that this candle had closed bullish. Well, I knew this candle had closed bullish, and I still went against it. So, human error, it is what it is. Learn from it, log it into the journal, and go forward. But we, after breaking it down and looking at it, you know, we talked about it on stream too. So we talked about all of this on stream because we took the trade on stream live. Price formed a change of character. That 4-hour candle that closed bullish that I, you know, was aware of but didn't really too close pay attention to, it closed right here. So it closed as it's starting to form this change of character. We get a push up, a push down within our 4-hour candle, and then you get this bullish candle that closed here. You want to take entries here and you set your stops below this low. Why is this our key low? If you look at it on a smaller time frame, you would understand that that was the area that price that was the demand zone that price needed to come back to. So that's what we set our stop loss below. And then on a 5-minute time frame, we take this trade after the 5-minute candle closes bullish, set our stops below that low there, and then we just look to target conservatively, and this is a conservative, but I know based on how I execute how I would have went around about this trade. But if you look at it on, I thought it was a 15-minute time frame, maybe the 4-hour. Oh no, it was the 4-hour time frame. So this is where the resistance is at that price, because you know, overall, until we had got this break yesterday, this was in a bearish trend. We have a low, a lower high, a lower low, lower high, lower low get created. So we're in a bearish market structure, which is why I was anticipating that continuation move to the downside. Conservatively, we could target this area here, but how I personally trade and capitalize, if we take a look at the 5-minute time frame, this is indicative of our previous 4-hour high. So let me go ahead and show you that so we can break that down too. This was our key 4-hour high. Why is this our key 4-hour high? Because it was the start of the push that broke our previous low. So as long as this doesn't get broken, price is still in a bearish structure. We can look for sales to the downside. So where would I have taken profits on that buy after that 4-hour candle closed bullish? Well, conservatively at a 1 to 2.38 here, but I know I wouldn't have closed it here simply because of this 5-minute. Within this 5-minute candle, price pushed up immensely, and it only took a 1-minute candle to really make that 5-minute push. So what does that mean in terms for me? Well, we get the volume here. 10 o'clock comes. That 10 o'clock candle, first minute in 10 o'clock, pushes up crazy. So now we done broke through that safety zone, you know, and pushed all the way up here. It's likely that we go ahead and break that 4-hour time frame high. And how I personally go about this is when we get high volume like this, price could potentially go long. So you want to hold these positions, and where I would exit is on for one, when we get some rejection. So likely for me personally, I would have closed after price pushed up. We broke that high and we started to see this candle pull back. Let's go ahead and get out. We already got more than what we wanted or anticipated, and I think in total that trade would have been a little over a 1 to 4 risk to reward, probably like a 1 to 5 dependent. So this is a stop loss. Let's just say conservative entry. We get in after that 5-minute candle, so we got to see that 5-minute candle close. 5-minute candle closes, boom, we're getting in that thing, setting our stops below this low over here. Let's remove this. Setting our stops below this low over here, looking like about a 4-pip stop loss and a 1 to 5. Conservatively, let's just say we went a 5-pip stop loss conservatively. A 1 to 4 risk to reward, and getting out right after. Generally, it'll be after a rejection or a key high is taken, or we get the first bearish candle to close after a high volume move, that first bearish candle to close, and you can see I would have still gotten out around that same area. And after we would have rejected and it started to push down, I likely would have just closed anyway. And hindsight is 2020, but this is how I personally execute on these types of trades when we have those high volume moves, similar to what we've seen today, or the move that I was supposed to take this morning but didn't because the 4-hour candle hadn't closed. We're starting to get that retest to our area. That's a good sign. But we'll likely be able to take our entry there. But so this morning, looking at the charts, I'm on the charts while I'm editing a video, and I see that price broke up through this level here. We pushed up, broke up through this level. It's like, oh man, we got some volume in the markets. Okay, where's my key demand zone that I want to see price flip off of? The first 5-minute candle that started this push to this upside, that would be this candle here. So, and I'm talking to my brother about this as price pushed up. I'm like, I'm gonna wait for a retest down here, and then we're gonna get in on our buys. It's the same exact trade that we took on Monday. Will it let me go all the way back to Monday? Oh, this is Thursday last week. Okay. So Sunday. Oh, right here. So Monday of this week, we got a 1 to 2 risk to reward on the trade we took. What did we see happen? We seen that price have formed a change, or started to form a change of character. So we had a breakout to push up. Price then closed bullish up here as a 4-hour candle. So what was I looking for price to do now that we done broken these structural highs? Well, I need a retest to that first candle that started the break. That was this candle here. And when the 1-minute candle closed bullish, see if it'll let me go all the way back over here. Okay, so after we tap into my premium zone, after this 1-minute candle closed bullish, I went ahead and took my entries and set my stops conservatively, safely below this low down here. And then look to target just a simple retest of these highs, and if we could, to see this 4-hour high get tested up here. Now, what did I tell everybody in the Telegram? Because this was all broken down on, it was broken down on the live stream, but we couldn't get our entry until after we got off the live, because we got off the live at like 10 o'clock, and then price started to form down like this. I'm telling everybody in the Telegram, hey, look, looks like we're getting to that area that price that we talked about on stream. I'm looking to take a buy when price gets here. After price tapped into here, that candle closed bullish, I told everybody and noted everybody that I took a buy and to be on the lookout for this resistance right here, because we know the larger time frame had been in a bearish trend, and if price got to this level here and started to reject hard, then we could see a steeper move to the downside. We don't want that. And when we got some volume, price is moving up, I went ahead and moved stops to break even. Boom. When we reached this level, I'm like, hey, we reached this level. Be wary that we could start to see a flip. Price came back up here. We started to get some bearishness. Closed 90% of my profits at like a 1 to 2 risk to reward. So it was like a 1 to 2. Boom. Closed 90% of the profits. Now I'm like, I'll leave the 10% risk free because I have my stop loss risk free. I can hold if price wants to go up here, can hold that 10%. What happened? Price formed this resistance at this level. It pushed up again. Once it broke this high here, I then trailed my stop loss below this low. But then after price could not fit, and I this was mentioned beforehand too as well. When I told people that we need to keep an eye out for this level of resistance, I also mentioned in that same message that if 1.10 is 714 level, so 1.10714, this was the level, is not broken, then there's a good chance that we can flip. So when price pushed back up to here, we started seeing rejection. I went ahead and closed the rest of my position and called it a day. A simple, essentially the same trade that we've seen happen for this morning, or not the same trade in terms of price did in fact break this high. But what do we have happen? So if I take my best entry, which is right here, this would have been the entry I would have wanted after this first 1 minute candle after tapping in our zone closed bullish. I'd have set my stops below this low, similar as what I do for every other trade. And then we target back up to this high. Why? Because this was it created a new high. That's where I would look to target. What did we see happen? We had a lot of volume. I hold through the volume. Price starts to reject after the volume. We get out. And it's likely would have closed a quick 1 to 3.5 risk to reward trade. That's perfect. That is That is essentially what it is. And that would have been the day. So if I would have taken that trade this morning, that would have been the only trade that I take today. And we would just break it down on stream, and then we would talk about, what price can do going forward. So what did I want to do? I wanted to wait for this 4-hour candle to close because I wanted to see what the direction was going to be, understanding that we had news that was going to come out. So, which is why I didn't take that first buy position, is because, the news was going to come out and I didn't want to be in on this trade at the start of the news. But what did we see happen? Price pushed up, news came out, price dropped all the way back down, started to form our change of character. Where am I looking for price to go? Currently, I need to see a retest back up into here if I'm looking to take a sell position. That's my premium zone. That's that every trade that I take, or most every trade, unless a change of character happens at a retest location, that's the entry model. We have a change of character, price was created higher highs and higher lows. That was the whole reason why I was looking for the buy. Then we got a low broken. Boom, broke our key lows there. Let's see a retest back into this level. That would be amazing. We get a retest back into this level. First, likely the first 1 minute candle that closes bearish within this area, I'll go ahead and take short positions. I'll set my stops above the high, and then I'll look for the 4-hour candle to flip bearish, which is likely what I'm anticipating, And what did I say about our entry? It generally comes at 10 o'clock. So let's see if in the next 30 minutes, around, let's say 9:55, if price is up at this level here. If price is in fact up at this level here at, let's say, about 9:55-ish, this is all lining up for, that sell move to the downside following this simple change of character. So what happened yesterday? This is exactly what happened yesterday that I went wrong on. Yesterday we had the 4-hour close bullish, which I I didn't know, but I was neglecting that this 4-hour candle had closed bullish. And then on the 5-minute time frame, if you look at it, this was the area. So this is where that 4-hour candle had closed. This bullish candle right here, that was the 4-hour candle closed barely bullish, but it did in fact close bullish. And then what did we see happen though? We got a breakout here. What is that? That's our change of character. Boom. What did price do? Formed up, pushed up, came back down, retested this shallow. It was a shallow retest. It wasn't our deep retest back into these levels down here. But that's okay. Price showed on the smaller time frame the change of character. Price pushed up, pushed down, created a new high, then came back down to a key low, and then it continued to push up. That's essentially what happened. 4-hour close bullish. Smaller time frame shows the change of character. You execute on that direction. So for today, same thing. Previous 4-hour close. Where the heck is the chart at? Oh, okay. Previous 4-hour close bearish. Boom. We are in a bullish structure, but we got a strong rejection off of a key level. So we're at a key level here. Price did close bearish for our session time. I'm okay with getting stopped out of a trade that pushes up through this. You know what I'm saying? Because it doesn't happen too often where you see price come to a key level of resistance. Let's say, for instance, here, price came down, pushed up to this key level of resistance, had looked like it was a strong bullish candle, and then closed bearish, and then you started to see a dump off. You got a corrective structure, came back down, dumped off. This was likely some news right here. So that's not a normal market structure. This I know is news. So yeah, in terms of that's okay. I'm okay with banking off of this, and it's a premium zone, because if this does in fact flip, and we're anticipating a 4-hour candle flip, at the very least, we would anticipate price to come back down to this area, and that's what I'm looking to target for, a 1 to 3. But where could price go is it can make a steeper move to the downside into this level of demand, which would be the first area that I would look at within here on the smaller time frame, or it can start to fill this gap following that volume that we had, because on the larger time, well, I'm not gonna say on the larger time frame, because if you go to the daily, we've been bullish. Prices has in fact been bullish. We broke a high here, came back down, corrected, retesting an area, sort of kind of a key area. But to me, this is setting up for a steeper drop down. That's essentially what that would be for me, based on a larger time frame. But we're not focused on a larger time frame. We're focused on this session, this smaller time frame. This is what we're looking to trade. And if price just flips right here in no man's land and goes down, whatever, I'll let it go. It's not worth it to me to take this trade, because I would have to still set my stop loss above this high, and then I don't want to take this one-to-one risk to reward trade. It's not a high probability area. It's not it's not a highly profitable trade. So if price just flips from here and goes down without me, so be it. That's cool. But I want to see price tap into this level up here. And when is it likely that we get that? Well, around 10 o'clock. I mean, not around 9 o'clock, but around 10 o'clock. So that's generally when we start to see that. And so for now, we're just waiting, dude. We are just waiting. And I am so tired. I'm not going to lie to you. But there's no time to rest. As soon as I get off live with this, I'm going to finish up the video breaking down Monday's trade. And then after I finish that up, I'm going to post it. And I already got the scripts written out. It's not really I guess it's a script, because I'm going to read it and do a voiceover. But it's just a recap over what trade we took each day. Monday's trade was a 1 to 2 risk to reward trade. Tuesday's trade was a break-even trade that could have been a 1 to like 2.5 risk to reward trade that I was supposed to get in after the news. So this is what happened. This was the trade. Price had come to the 15-minute. Oh man, yeah. So price had came to this 15-minute level of demand. Boom. That's what I was looking for price to tap into. Dial down to the 5-minute time frame, because that's where I was looking to take my entry. I wanted to get in on the first bearish candle that tapped into this range. That was this candle right here. Boom. Got in right there. I think, I had my stop loss above this high here. And all I wanted to see was a push down back to break through this low. What happened? I took my entry at 9:30. What did we see happen? At 9:45, we had news come out. Boom. What happens generally with news is you'll see these types of spikes, and it's called a liquidation. It's a liquidity grab. That's all it's called. So what is a liquidity grab? It's market makers' way of taking out traders before pushing price in the right direction. Now, I didn't lose on this trade. I got a break even, but my entry should have been after that news came out, essentially. So the first bearish candle within this area after the news came out, my entry should have been after this candle, stop loss above this high, and then that same target back down to the key low for about a 1 to 3 risk to reward trade. And it did in fact go to that area. And if I didn't modify my stop loss, because that's just what I do, understanding that the news was probably or could take me out, we got some volume. Looked like we was running about a 1 to, I would say not a 1-to-1, but we started to see some volume. I went ahead and moved stops to break even, and then got taken out at break even, which would have liquidated me and then pushed to take profit. So not a bad day. I mean, it was a break even day. It wasn't bad. And then that night right here, I had missed my entry that Tuesday night. So I wanted to trade within this volume. Previous 4-hour candle had closed bullish. I wanted to trade within this volume. It would have been on a 1-minute time frame. It was a trade because volume was just so slow. It would have been right here within this candle pullback. Once it came to this demand, I don't feel like scrolling all the way through the 1 minute to try to find where this area is at. But essentially, price pushed up, pushed down, pushed up, pushed down, pushed up, broke this high, came back down, couldn't break this low. And within this area, which would have been the start of my 4-hour candle. So 4-hour candle closes here. We close as a bullish candle. Price pushes up, pushes down within this area with a stops below the demand, because this is a range. This is a range trade. Range trades are generally slower. They're not high as probability. It takes a little bit more time. But a stops below this area. And this is if I execute perfectly throughout the week, so with perfect execution, I I had missed my entry, but I seen it early enough to break down the trade before it actually ran to take profit. So I was able to show my girlfriend this trade because at the time I was cooking. I started cooking, and then I get on the charts, and price had already pushed to right here. So it was like this candle was bullish up here at the time that I had seen it, and I was like, dang it. And I had been waiting for it, and I just dropped the ball. It's on me. I dropped the ball. I made the decision. I wasn't actually at the charts at 9 o'clock on the dot when I should have been, and I think the entry was at like 9:15. So 9:15 the entry was happening, and I bumped it. It just coming a little bit late to the charts during the session, and price was up here. Didn't want to get in because it had already moved so far, and then from there I just wanted to take profit at the 15-minute level of resistance. That's where my target was going to be. Where's that 15-minute level of resistance? It was at this OB right here. So that this order block right there, that's all I wanted to see. And since it was a low volume trade, as soon as price gets near this up here is where I go ahead and go take my profits, because for Asian session trades, I only trade from 9 to 10 for Asian session. So for New York session, I'll be here all day, but I got to go to sleep at 10. So being able to get a quick 1 to 2 risk to reward during the Asian session is perfect for me. So as long as I was able to get a 1 to 2, I likely would have just closed it there, and this is glazing my entry. I think the trade itself was like a little bit about a 1 to 3. So without the glaze on the entry, and let's say we say a conservative stop loss below this low here, at the very least, we get about still that 1 to 2 target that I was anticipating. Didn't get it. Asian session yesterday was trash, so didn't trade that. Yesterday was supposed to be on the buy, so Monday 1 to 2 risk to reward. Tuesday break even. Tuesday night missed the 1 to 2. Wednesday morning, wrong direction trade, lost a point. Well, I lost less than what I initially tried to, but that I initially risked. And, that's just what it was. And so last night's session was trash, but we broke down the 1-to-1 trade that, could have been taken. I didn't like it, but it could have been taken. And now we're here. So all of those trades that we took this week, there will be a video. Well, I already wrote the script or the recap of every one of those trades that we took. And then I'll just make the video. And next week, I'm planning on being more up to date with it. So every day, being able the day after to have the video ready and posted. So today is Thursday. I didn't get the idea until Wednesday. Till like late Tuesday, and I didn't do too much yesterday as far as creating the videos. I scripted them, I looked for the sound design that I want to do for them, but in terms of recording, I only recorded the day one video. But the plan for next week, going into next week, is a couple of things. Is to take the trade and then immediately hopping off stream, recap what happened, and record it, edit it, and have it ready for post for the next day. And so I'll do that all week. And then Saturday, I might not do, if I take a trade on Friday, I might not make a video specifically on that Friday trade because the video wouldn't get posted till Saturday. And every video I say, today I took a trade on X, Y, and Z, so. And the videos are kind of cinematic, which means they kind of have a lot of shots, which takes time to set up and do things like that. But what I'm going to do for the weekend, for that Friday, is just a whole broad weekly recap. So a weekly recap of all the trades we took, and what was the profit potential for this week. The profit potential, as of yesterday, the profit potential was about $9,500, which is like a little bit over 4.5 or 4.75% on one of my accounts. And where I'm at is a 0.5% on the week, which was the results of not being so. I made 1,400, it was 1,500 at the 1 to 2 risk on Monday, right? Break even trade the day after that, right? Which should have been, if we entered on the correct time, should have been about, I went conservatively instead of 1 to 2, but it should have been about a 1 to 3. So that break-even trade was a potential trade that we should have been able to execute on, that we ended up break-even. All right. The next day, I got the wrong bias as far as the direction on the news. I ended up only losing about $600 on that trade. All right, cool. That brings us back down to a little less than a band on the week. And then, this morning didn't execute on this trade, which would have given me a solid 1 to 3 risk to reward. That's about $3,000. So we go from a band to $3,000. And I think in total, including that trade from yesterday, I was at about 9,500. So if we execute a perfect week this week, getting in where we're supposed to get in, respecting off of the 4-hour time frame, and then taking entries or not missing entries. So I got that Asian session trade that I missed, that was a 1 to 2, and then this trade today that was a 1 to about 3.5 risk to reward that I didn't take because I was waiting for the 4-hour candle. Still a good structure. I would have likely just reduced risk going forward. If this is happens before the New York 4-hour candle closes, I'm going to take it at a reduced risk. I already take trades at 0.5. So I would have taken this at, let's say, if we, execute perfectly. I'm not going to fault myself for this trade because of the fact that, although I did see it and I set it up and I said, look, I'm looking for a retest in this area. It happened before the 4-hour candle closed, so I didn't want to take the trade, but it did, in fact, execute. So going forward, learning lesson, I'll just modify my risk on the trade. So let's say at a perfect week, and I'll count this trade to a perfect week, we're looking at about, it was $9,500 plus, let's say we would have made $1,500 on this. That would have been about $11,000 on the week, which is a little over 5%, which is like actually 5.5% of a 200K account that I have. And I have two 200K accounts. I have another 50K account as well. Actually, I got two 50K accounts. I forgot about one. I haven't been trading it. I haven't traded in a while, but I have two 50K accounts and two 200Ks. So I've only been trading this week one of my 200Ks. I don't like to put all of the risk on all accounts. And why I don't like doing that is simply because, $11,000 on a perfectly executed week is more than enough. $1,000 on this week which is where we're about sitting at is okay. Don't get me wrong. It's like, that's $1,000 on not going to say a rough week, but relatively break-even week. We only got one real trade that hit our full take profit, but we had so many different opportunities that we could have executed on within our session that abided by the strategy. I'm not gonna say so many. We had two missed trades, one wrong direction. So 3 trades that should have been winners, or 2 of them they were winners. I just missed them. But that third one was a loss, but it was my fault because I was in on the wrong direction. And then the one break-even trade, had we waited for the news to come out and then execute, then we get another 1 to 3 on that. So there's 4 trades that we could have potentially made a profit and swung profit on, which would have gave us our $11,000 total on the week. But, it is what it is. The week's not over, and we're still looking to get this move here. So, it's still that. What am I trying to say? We can still execute on this week. We can still end the week off good. We're in profit on the week. It's not a bad week, In terms of execution, there's things that we can improve on. And that's what this is all about. That's what these live sessions are about is, improvement. Just forcing ourselves to show up. That's why I'm going live, so that I can, force myself to be active within this community, within my community, because you guys deserve it. And I just sit on this stuff. I have so many different ideas. I have like 20 different videos already scripted out and that I haven't recorded or started recording on, because it does take time. The videos that I'm trying to create aren't just your average sit down, let's just read the script, talking head videos that I used to make. They're actually more in depth. They have more shot selections. I have to do more prep work in terms of writing the script. And, I used to just sit down and go off the dome. I would say what I said, and if I had cuts or pauses, I would just edit those out and then I post it. But I'm trying to make the videos more interactive, more interesting to watch, because trading is an important skill. So the more people that we can get to, come to this skill and to learn from the videos, because I want you to learn how to trade from For the Culture FX. I don't want me to just to be a community where I say, no, you gotta buy such and such. No, from those videos alone, I want you to learn specifically how I trade, and then to learn from my mistakes. And the best way I can do that is to make it essentially like a journal, and every day is going to be a new journal entry. So I got my journal here. Journal I wrote a couple times, but yesterday's video, or the video that I'll be recording today, is already written down script wise in the notes, as far as a recap. And I want each video to feel like a journal entry, so that people don't feel like I'm talking at them, more so talking to myself on how to improve, because essentially that's what this is all about. So let's see where we're going here. 7 minutes until that 10 o'clock candle forms. We got a 15-minute candle that looks to be bearish currently. Previous 30-minute close bullish. I want to see if we can get a steeper retest, and then this 4-hour flip. 4-hour, since we got a liquidity grab with the news volume, you know what I'm saying? It doesn't have to push all the way up here, but that's my premium zone. That is my premium zone. So I'm gonna wait for the premium zone, and then we'll execute on a trade. Being that we get the trade within this session, that'll be great. That would be great. But with any time, or at any moment, this 4-hour candle could flip. And if it pushes all the way down within this middle of this structure, we got a little resistance at this level, which price could likely be respecting off of, which is why we start to see this bearish volume. But I'm not looking to take that trade. Price can go without me. I don't care. I'd rather wait for a premium trade that has a higher probability setup, or higher probability success rate, than to force a trade that's not only going to give me a lower risk to reward, but it has a lower probability success rate. I'd rather not take a trade at that point. It's not worth it. And these are some things that you just kind of have to learn going through in the markets. You got to be patient. I used to think trading was a get rich quick scheme. Why I get so upset? Like, I get upset when I miss trades. It really bothers me, because I feel like I set myself back, and then I feel like I hold the community back by not sending out this idea and not executing on it, because it was a profitable idea and it is a valuable trade. You know what I'm saying? And it's reps. So I get upset when I miss trades. When I missed that trade on Friday or on Tuesday during the Asian session, I wasn't upset. I don't be boo-hoo, but it irks my nerves to miss a trade, and because it's something that I did, you know what I'm saying? It's something that I could have done better to go about it. But that's just what trading is, dude. That's just what it is. So I'm not too pressed and beat up about it. You learn from the trade, and then you line it back up again. Tomorrow there'll be another setup. Tonight during the Asian session, there'll potentially be another setup. So it's like, you can't get worked up on the things and the trades that you miss. It is what it is. But in terms of getting active and full on potential for what we could have made this week, we have some improvements. A profitable week, but roughly 5% short on where we should be, or where we could be if we execute perfectly. And we're not perfect. I'm just trying to work towards being better, so that we can have a perfect week. Those perfect weeks really do add up. You know what I'm saying? So that's it. We're just trying to get better every single day. So waiting for this move here. We're starting to get a bullish move. Let's see, what is this stop loss gonna be? Let's go ahead and start preparing for this trade. It's looking like we're gonna have about a 9 pip. It's looking like it's gonna be about a 9 pip stop loss. Yeah, so conservatively, let's say 9 pips. And look for a 1 to 2.7 risk to reward at a break of this low here. Potentially might take profits at the demand zone at a 1 to 1.5, or 1 to 2 risk to reward. break this low, we get about a 1 to 2.7. So that's looking like what the setup is going to be. And all I want to do is see this 4-hour candle flip bearish. That's it. That's all I'm waiting for. I gotta start promoting these lives more. And I'm sorry for whoever came in here and, you know, the people who's come and then have slid, that I'm not able to, you know, respond to any of the comments in the chat. And it might just be me here now. It is what it is. In the future, this will be jumping. You know, we'll have a whole bunch of people on it. I don't mind. It is what it is. I'm going, and I'm just gonna continue to make this do what it do. But we're looking for this entry. It's looking like we can get our pullback to this area up here. I like the fact that we formed this change of character. We're gonna take that entry. We're gonna look for price to continue pushing down. I got my chart set up here so that I can have my entry ready. Let's go to my FX book. Let's go ahead and I can do this on the screen here with you guys. So let's go. We'll go to interact. So generally, before I take any trade, I always put my stop loss at pips. You've seen that we were looking at about a 9 pip stop loss conservatively. So you just go over here to the FX calculator, and you want this position size calculator. So continue to my FX book. Currency pair doesn't really matter. USD, account size, you need to enter all of this stuff. So account size, where do I get to hit the values at? Oh, okay, there it is. My joint is tripping. So we got account size 200K, 200,000. Risk ratio, we want to risk 0.5%, which is about $1,000. 0.5%, $1,000. Stop loss in pips is going to be 9 pips. And we're only going to have one trade. So we're going to calculate that. We're looking at about 11.11 lot size. So I'm going to go over here to my actual account. So there's a couple things that I'm gonna do this weekend. One, I'm gonna make a intro for the live stream so that I can go live 15 minutes early and then have like a 15-minute countdown, probably some music playing, whoop de whoop, you know what I'm saying, just so that we can bring people in, promote it early. I can already send out the stuff, and then when it's time to just hop on, we can just be already live. We can get right into it. Another thing I'm gonna do is change this template. So the thing that you guys are seeing right now, where you see my face and then the chat is supposed to be there but the chat is not there, and then you see the the Instagram at the bottom, I'm gonna change this so that we have the Telegram or the trading view chart, but also so that you can see my actual entry that I'm gonna take on the trade, so that you can see, because I trade on, I think this is DX Trade, and I want you guys to be able to see my actual entries when I take the trade, where my entry is at, where my stop loss is at, how I manage it, to be able to see this screen. So I'm going to make that adjustment this weekend as well, in terms of, what we're going to do here. So, oh, you can see that we just got a huge spike down. Okay, hold on. What time is it? 10 o'clock? It's got to be that 10 o'clock candle. That 10 o'clock candle is it. I'm telling you that 10 o'clock candle is it. So we missed this trade. I'm not too pressed on it. Price did in fact respect and reject off of that level right there. That 10 o'clock candle come in, and that 10 o'clock candle is pressure. That 10 o'clock candle is pressure. It doesn't even have no top wick up here. So we've seen price just drop down immensely off of that 10 o'clock candle. We probably could have anticipated it based on this 15-minute closing bearish, knowing that 10 o'clock was going to give us some volume. Still wouldn't have been worth it conservatively on a more risky trade for price to just respect off of this level. Maybe we get that 1 to 4.5. I'll probably do like a 1 to 5 risk or pip stop loss, but I wasn't looking to take that. I told you guys early on that I wanted to see price come up to here. Hopefully we was going to tap in at 10 o'clock and then see the flip down, but price closed bearish on the 15-minute time frame and it started to push down. What is that doing for us here? It's giving this 4-hour candle its top wick and it's coming to flip bearish. Was what we was expecting for this session anyway. This is what we was expecting for to happen. So we wasn't able to get that one. And you know, it just didn't abide by how we wanted it to work out, you know. Right direction in terms of, you know, the trade, and you can see how it's reacting off of that demand zone where we was going to be looking to take that profit at a 1 to 2 if price did in fact come back up to our key level here. But yeah, that 10 o'clock candle. So if anything, we wasn't able to take a trade today. That is what it is. But this 10 o'clock candle, man, I'm telling you, if you go back and you back test this, and I'll just show you for quick shits and giggles. Where's the indicator tab? FX market sessions. So you pull up these FX market sessions. You look at New York, 10 o'clock candle, boom, high volume. Yesterday, that's the Asian session. Where's the New York session? Boom, 10 o'clock candle. What did it happen on the 10 o'clock candle? High volume. Let's go back. And this is consistent. This is consistent, right? What do we happen? This was the 10 o'clock candle. What happened after the 10 o'clock candle? That bearish move to the downside that we were supposed to be in on. Let's go again. What happened at the 10 o'clock candle? Oh, well, our entry came at 10:30, but it was after 10 o'clock, though, is what I want to get down. Is after 10 o'clock is generally where these good moves, or the entry time frame for these good moves, is generally at. Let's take a look here. Let's go back. Where's 10 o'clock? 10 o'clock is right here. So 10 o'clock, you get you a move to the downside. From this, you get a liquidity grab, similar to what we kind of had got taken out on Tuesday. And then you see this move to the downside. If you take a look at, bro, look at EURUS. Look at this, bro. Let's go back over. Look at this volume. And this was perfect. If the only thing is that it didn't come to our key level that we wanted to see. But understanding where price was going to go for this session and what we could expect for this session coming off of that previous 4-hour candle, it is textbook, man. It is textbook. We wanted to see this 4-hour candle form a top wick. We wanted to be entered in at the top wick up here. We wanted to really get in up there, set of stops above that high. And all I wanted to see was this current 4-hour candle flip bearish. We wasn't able to get our entry because price didn't come to my key level. But that doesn't matter. That doesn't matter. What matters is that this consistently works. This consistently works. And today it didn't reach our key level that we wanted to. Whatever. Yesterday it did reach that key level. And then you see a buy following that 4-hour bullish candle. The day before that, even with the 4-hour closing, see that entry that I took on Tuesday where we got, or Monday, where we got the 1-to-1 or 1-to-2 risk to reward. The previous candle closed bearish, and though price came up to this area, and this is why it was important if price didn't break this, that we could see a flip, we was able to take that there, and then price closed bearish. But it did in fact get that 4-hour candle flip, and essentially all we wanted our trade to be today was that 4-hour candle to flip. We would have broken the low that we were anticipating, and then price, you know, is doing its thing now. It didn't reach my area. It is what it is. I'm not tripping over it, I promise you. There's a difference between when I actually miss a trade, like how this morning where I just didn't take it, but this didn't abide by my rules. This did. That's why I was upset at myself for not taking this. I'm not upset for not taking this trade here in the middle of kind of no man's land. I mean, yes, on the smaller time frame, we could say that we started to see a change of character happen within this level here. Price had pushed up, pushed down, pushed up, created a new high, came back down, didn't really do nothing, pushed back up, didn't break this high. Then it broke this low here. This becomes your key high, and then price goes down. I mean, it is what it is. We could have gotten it, but I wanted to see a more premium zone get hit before that change of character. But that 10 o'clock candle don't lie. You know what I'm saying? That 10 o'clock candle just does not lie. That 4-hour flip happens. You know what I'm saying? And it just is what it is. I'll chalk today, and it was what it was. You feel me? Two dime piece setups for both of the session time. This buy move up and a corrective move to the downside just didn't quite reach the area that I wanted to. Didn't execute on it. Previous 15-minute candle closed bearish. We understand that this is a liquidity grab because price reacted hella off of that 4-hour level. You just do it, and it's really top down. I know I'm breaking it down from the bottom up, but it's top down. So you know that price comes to a key retest level, grabs liquidity, closes back inside, was bearish, foreign bullish, is pushing. It is absolutely ripping down now. And this, I just love this. This is what I love this. I love this. I love this. I love this. I'm not mad that I did not get in at my premium zone. I am not mad at all. I was okay, and I told you guys I was okay with this happening. But I just love that this happens so often, and it's so predictable. It is so predictable. And another trade is gonna come. I'm not tripping off of the single trade that we talked about. But the fact that this happens consistently over and over and over again, and that we were able to talk about that 10 a.m. candle. For me, it's 10 a.m., but for you, for wherever you're at, it might not be 10 a.m. But essentially, it's just the second candle after the start of the New York session. So whatever that time frame is for you, the second candle after the start of the New York session. I do the same thing for Tokyo session. 9 o'clock Tokyo session starts at 8 p.m. Eastern Standard Time, my time. I trade 9 o'clock. So that second hour after the new 4-hour closes in our session time is always a dime. It's a dime. I'm telling you, it's a dime. And today was a prime example of how this works. It's just how it just works, dude. It just works. And I noticed this a long time ago, and it just comes down to finding a system to be able to capitalize on it, refining the system, understanding what time frame is the time you would take it, understanding that you got to wait for the 4-hour candle to close, understanding that you want to trade inside the session, understanding all of these different things that add up to being able to capitalize on these individual waves, and to be able to consistently replicate that same process over and over and over again. So wasn't able to get the trade today, but we had a killer setup that happened. It is what it is. We'll get the next one though. We'll get the next one. We were right in direction, wrong on the entry. That's just what it is sometimes. I can't I can't be mad about it. I'm not upset that I didn't take this trade. No, I'm not upset at all. Now, was I upset that I didn't take that first trade this morning? Heck yeah, I was upset that I didn't take that one. Only because I said I was going to take it. That was what bothered me, is that I was like, I said I was going to wait for price to come back to this level. And when it did come back to this level, I didn't execute because this abided by the system. Price had created a new high, came back to the key demand zone. Look for a continuation for price to target this. What did we see happen in this session? Well, after we got that high, price came back, broke that key level there, formed a change of character, came back down. Where was our target? Back at the low. It is a replica. I can't even say what it said. You could do it over and over again. That's what I'm trying to tell you. It happens over and over and over again. It doesn't matter what time frame you're looking at, it kind of does, but this happens on larger time frames. It just takes longer. But essentially, that would have been the trade of the day. And it was a solid move. So, and it's literally just me on here talking to myself, but I don't care. One day I know what this is going to be. One day, off of this simple understanding of how markets move and how charts move and how it works, is just going to be something that is going to be so impactful, not just to my life, but to multiple people's lives in this industry. I'm telling you, we're gonna really change the way wait, you guys can't even see this up here? Am I tripping? Why is my FX book up? It's moving to my FX book. What is going on? See, yeah, now my oh no, this is just super delayed. I'm tripping. I'm tripping. It's just super delayed. But you guys see what happened. We talked about it at the beginning of the session. If you wasn't listening, you can go back and you can look at it. Previous 4-hour candle closed bearish. After rejecting off of this level here, price tapped into this level. We closed bearish. Up in here, I wanted to see price give me a full-on retest to my key zone. And what do we have happen after price closed bearish is what we got was a change of character. So price was creating higher highs and higher lows. We get our change of character. Boom. Change of character happens. Price breaks through. I wanted to see a retest back up to my key zone. This was going to be my key zone because it was the first bearish candle that started for that bearish push. Could I have done it off of this 15-minute candle? Yes. Understanding and why is just simply understanding that this was the starting 15-minute candle. Though it's a fat 15-minute candle, it's only fat like this because of the news, right? So could I have said that, okay, if price taps into this level, I can wait for a change of character and then execute? That's the only thing I would have did differently. But I told you guys beforehand that I didn't want to trade inside of this midway structure. And it was relatively low and slow volume, though it did form on the smaller time frame a change of character. Price came up, pushed down, pushed up. We're in a bullish wave. Came down, pushed up, didn't break this high, came back down, broke that key low, corrected back up. 15-minute candle closes bearish within that area, and then a sell move down to target the low. I mean, it is what it is. I was waiting for price to tag my premium zone. But essentially, we weren't wrong on what we thought was going to happen in terms of the direction we wanted to see, and it was looking like price was really bullish. It looked like this at first, but we just knew that this current 4-hour candle would likely flip based off of the previous 4-hour candle there, that price could potentially go down, and all we wanted to target was that previous 4-hour low. And you can see what's happened after price taps into this 4-hour low. You start to get some correction and some slow volume. You get a high volume move, push down, boom, we come right down to this level here, and then we start to see this change there. And all we do is want to target there. So if we target, let's say, the change in character based off of the 15-minute time frame, and I don't even know that I would have had enough time to enter this. I would have had to enter as like 15 seconds before this, which is generally how I take my entries, but like 15 seconds before this 15-minute candle close. It looked like it was going to close bearish. You can set your stops. You don't want to put your stops up here. You want to put your stops above this high at this point, only because of the risk to reward. This was a liquidity grab, so price pushes up during liquidity grabs during news, kind of like what we seen happen on Tuesday during our Tuesday session when we took our break-even trade right in here. You look at it on a 5-minute time frame. Price had respected off of our key level. It was based off of the 15-minute level of demand. So that was the 15-minute level of demand. You got this 5-minute candle closed bearish. Went ahead and took my entries as that 5-minute candle was closing bearish. Set my stops above here. Price pushed down. What was wrong with this trade? We took it before the news came out. News came out, liquidity grab. Got stopped out at break even. Price grabbed liquidity above these highs. You can see that price didn't even nearly tap these highs. Let's see if we can see on the 1-minute time frame what happened. See, this is why I don't like. Oh, okay. It was right here. So you can't even really see it on the 1-minute time frame. If we could dial down to like the 15-second, you would be able to see that there's probably an OB, right, or not an OB, but our key high up here that price respected off of, closed bearish and pushed down. All I would have wanted to do is just trade that 5-minute candle after the news had closed for that liquidity grab. That was today's trade. We got to go back to Tuesday, the Tuesday structure. Here it is. Boom. So this candle closes bearish. As soon as that candle closes bearish, and realistically anywhere within the top wick of this candle, you can go ahead and take an entry. Set your stops above the high, only because that was the liquidity grab and price was still high. And as long as it gives us a solid risk to reward, it's worth taking to me. You know, and a 1 to 3 risk to reward is worth taking. in terms of how this would have worked out, you would have had to put your stop loss above here because it wouldn't have been worth taking to get just, the solid 1-to-1 risk to reward. I mean, some people just shoot for a solid 1-to-1 risk to reward, but me personally, I would have, if we identify that change of character, the 15-minute demand zone, then we got to change of character on the 5-minute, taking entries after that change of character or that 15-minute candle close, or as that 15-minute candle is closing, it is what it is. I don't necessarily like how this was pushing up because we could have easily got that continuation to our area with the spike of that 10 o'clock candle and then seen that move to the downside. What would happen? 15-minute close bearish, spike down instantly. It is what it is. But essentially what I want to drive home is that trading that 4-hour time frame within the top wick in the trade in the direction that previous 4-hour candle closed. Price came down to this level within this level of demand that I mentioned, and we started to see a strong rejection. So our trade would have been a quick and easy, I think it was like a 1-to-3 risk to reward if we trade right after this, in a perfect world. But I wanted to see price come back up to my key retest zone. We didn't quite get that, but you can see how price did in fact execute. We had the 4-hour candle that had closed bearish, I think like right in here. So right here, the 4-hour candle closes bearish. And as that 4-hour candle is closing bearish, not only is it rejecting off of a key 4-hour level of resistance up here, but we got on the 5-minute time frame now our change of character. Price created a high, low, new high, new low. Was supposed to scale in on this one. Didn't do it because it was before the 4-hour candle closed, just to target that high, or really this demand zone. And then, we see our change of character, our break of our key low. This is our key low because it started for the push of this high that broke the previous high. You get a change of character, continuation down, you target the low. It is cake work. This is the same exact trade that we were supposed to be in yesterday that we missed. Or not that we missed. I didn't miss it. I was in on the wrong direction. Previous 4-hour yesterday. Let's go through yesterday's trade, or yesterday's best setup, I guess you could say, is what it was. 4-hour candle closed bullish. Closes bullish during our session time. All right, boom. We thinking the next 4-hour candle is going to be bullish. Wrong bias. So what happens? You want to get in on that pullback. I think the 4-hour candle had closed. Oh, wait. That's the 1 hour. I got to see it on the 5-minute. That's the only way that I know. So on the 5-minute, what did we see? This was when that 4-hour candle had closed. It closed bullish, just barely, but it closed bullish. And then what also was in confluence with that bullish closure? A change of character. Price had created a new high, breaking out of this lowering structure that it was in. And then what do we see happen at our 10 o'clock candle? Same thing we seen happen today at 10 o'clock. We got the super high volume spike of news. Similar to what we seen, like I said, today. 10 o'clock candle comes, super high volume spike of the news. And these are just all improvements that we can understand. Like this week, it wasn't until this week that I really started to dial down to the session time of, well, what happens at this 10 o'clock? Why is it that every time at 10 o'clock, and I already knew from past trades in the past that a lot of times 10 to 11 would be the trade that I was looking for the whole New York session. And I would generally not be on the charts because I would trade like 9 to 10 in that range. And then, 11, 12, my trade would have been entry and run to take profit. And so it took me going back to back test this and to study EUR USD, the best times to trade EU, specifically the 2 best times to trade EU. And I can't trade one of them is London session open. So that's generally when you start to see some type of move. London session here, you can see price was breaking out of some highs. You get that London session volume. Other times London session will give you that volume early bird in the morning. Let's see, what was this here? That was 10 o'clock on Tuesday, the trade we should have took. Let's see, I know we got some. Okay, so you can see some of the volume that we kind of got within the London session here. Price opens, you get that volume move to the downside. Let's see if we can find some more London news. So London is important for you can see we got a move here for London. Price pushed up, created a new high, formed a retest play. What did it do with this retest play here? It's important to note. And this was what was I looking for? This was a move on Sunday that I was looking to get. I wanted to get in at this buy here, and there's no confirmation for the buy that I was in. And realistically, I should have been in the sell for that session because on the smaller time frame, 1 minute time frame, we had a change of character happen, and it was likely that we could get a corrective structure. Though we had broken out of this structure here, we should have been looking to take buys or entries within this area, our key level of demand. But that happened during the London. I'm asleep at this point. You know what I'm saying? But what I wanted to see, and the trade that I took, which ended up being, a little over break even, was this move to the upside with price. And I had a 5 pip stop loss because I wanted to be super conservative on my entry and look for a 1 to 3 risk to reward. I believe my target was based on the 4-hour time frame. So, 4-hour resistance at this level. This was my 4-hour target that I was looking for. Boom, there. Look for price to go to that area, because that was just the previous lower high that we have formed. And so what happened? Price did eventually get to that area. It just didn't happen in the session that I was looking for it to happen in, and because of that, I ended up with like a break-even trade. I took my entry right here. So this is where I took, I believe this is where I took my trade there. And, it hit that area, or it, came to our key retest level. And actually, no, I didn't take my trade there. I took my trade on the 5 minute time frame, which was, I want to give you guys an accurate representation, which was right here. After this 5 minute, and it was on the 1 minute time frame, but once this 1 minute candle started to close bullish, I did go for a 5 pip stop loss, which is like back there. But this is essentially the trade that I wanted to see play out. But I mean, if you look at the trade in hindsight, it's 2020, but looking at the trade now, there's no confirmation for a buy at this area. Previous 4-hour may have closed bullish, but at the current moment, there was no indication that price from this level, like there's not even a resistance at this level. So I don't know what I was thinking about. And this is not a trade I sent out. This is just a trade I took on Sunday. I ended up closing 50% when price couldn't break this high up here within this area. Couldn't break the high, so I closed 50% of the trade. Move stops to break even. Got taken out at break even. But was aware, not unaware, but was aware that on the one, let's see if the 1 minute is going to let me go all the way over to Sunday. We had a change of character on the 1 minute, and all it was a corrective structure. So we had to change a character to form a corrective structure to retest that key demand zone. Price did in fact go bullish from that key demand zone, but that change of character was indicative of price pushing towards the downside. So you can see that within this wave here, similar to what we've seen today. Like this is it. This is the model. Like this is the model. Price broke through here. You get your change of character. Price came back up. When price was right here, I was like, we probably should be in on sales. This is what I'm telling my brother at least. And setting the stops above there. Looking for like a 1 to 2 risk to reward when price taps into this, breaking this low. That was all I wanted to see, was that break of that low there. So it would have been a solid trade. It would end up being break even. So technically I have 2 break-even trades on the week, 1 winner and 1 loss in terms of the trades I actually took. But we talking about a full execution of a excellent week. Then we have a potential of upwards of 4 winning trades, and I didn't fault myself on that trade that night as far as the break even, and I didn't count that towards the trades that I had mentioned earlier, because the 4 hours, right, the change of character happened though, and I was aware of it, which is why I moved stops to break even, took a break even trade, and I didn't want to take a re-entry after I'd already took a trade on the bullish move. I didn't want to scale into hopping in a sell. For some reason that just doesn't sit right with my psychology. To price is bullish, oh no, it's bearish, let's hop into bearish thing, and then price ends up bullish, and you get you're taken out of either 2 positions, or you should have went with your first mind initially. And it's not like my target profit was wrong and the area that I thought price would go was wrong. No, that was spot on. It's just my entry area where I should have taken my entry was off. It should have been at the demand zone and then price go up there. You can conservatively set your stops below the low, 1 to 3 risk to reward. Happened during London, so I couldn't get it regardless. So it didn't even matter. And I woke up at 4 a.m. I told you I've been waking up at 4 a.m. every day. So I'm waking up as soon as price is hitting to take profits. Like, oh man, well, guess we'll wait. And then price got down. So for New York session, we looked for the sell move from here, set of stops above there. Push down, move stops to break even, got taken out at break even because the news came out. Liquidity grab, then went back to the target. So in terms of executing or entry, or I want to say target profits is money. You know what I'm saying? That Tuesday trade for where's the slow volume Tuesday trade that we was looking at? I think it was like within, is this Tuesday? No, this is Wednesday. Where's Tuesday? Tuesday night. Oh, right here. That Asian session trade, I wanted to be in right in here within the bottom of this candle and just look to target this resistance. That resistance was a dime piece resistance level if we get the actual entry. So in terms of, understanding the direction of the markets, how to execute, I get that, and it just comes down to refining to making sure that we get in when we're supposed to get in, exit when we're supposed to exit, and just don't be fearful. Execute on the trades that you have set up. If that was just going to be the one trade for today, that was just going to be the one trade for today, and it'd have been like a 1 to 3 risk to reward conservatively, a 1 to 3 risk to reward. And then this move here coming into the New York session, previous 4-hour candle closed bearish. You can get a correction. We didn't quite get the correction to where I wanted to see it happen, but you seen that continuation of the move to target the area where we was wanting to target, which would have been this low here. So all in all, not a bad day, no trades on the day. Setup worked out. It just didn't push to the area that we wanted to push to be able to execute on it for a price to move down. But we did see a change of character on the smaller time frame within this structure, which could have signified, along with this 15-minute candle closing bearish and understanding that this was a liquid grab from the news, that it's likely that price, since we have so much high volume, can't push all the way back up to our demand zone. It is what it is. You get the change of character. That's where you want to execute on the trade. So that's the only thing I would say going forward. But as far as, as far as today and this week, I really just feel fortunate, I feel that the system that we have is just getting better and better, and that we will be able to stack up, dime piece perfectly executed weeks. I've yet in my entire trading career have yet to execute a perfect week. That, and what I mean by a perfect week is not necessarily losing or a winning, a week where we just win all, because we've had weeks like that. But I mean a week where we execute on every single trade opportunity within our session and see what the results lie. I've yet to reach that full potential of a singular week where I capitalized on every single setup that I saw. Or I executed, shall I say, on every single setup that I saw. And this week, 4 trades, or 2 trades missed, 1 trade that I didn't take, and 1 trade in the wrong direction. So we're talking about 4 trades that could have, equated to some more profits, along with the 1 good trade that we did take on Monday. So Monday was a perfectly executed trade. We executed that to perfection. Tuesday, we got in before the 10 p.m. or before the news released at 9:45 and got taken out at a break-even trade. Luckily, we moved stops to break even because it would have got liquidated, and then you go from there. Wednesday, we traded the complete wrong direction. 4-hour time frame was bullish. We should have been looking for buys. If we execute on that with the target in mind of our resistance level on the 4-hour time frame, we get about a 1 to 2 risk reward trade. And since there was so much volume, we would have lucked up because of the volume to get this about a 1 to, I think it was like a 1 to 4 risk reward trade. Then Asian session last night, there really wasn't. I mean, I showed you guys the 1-to-1 trade that I was looking at, but it wasn't worth it for me to take the 1-to-1 trade, especially when we had so little volume, and it was likely that we could see a steeper move up. So like yesterday, 4-hour time frame had just closed bearish. Boom, we closed bearish. We want to get in at this top wick, set our stops above that high, look for that candle to flip down, and it did, and it broke the previous 4-hour low, which was my target. But the trade was only like a 1-to-1 risk to reward based on the entry I would have had to take or based on the entry model I would have had to take on that trade, and it wasn't worth it. So wasn't looking to trade that this morning. Didn't take the first initial setup, which would have gave me a 1-to-3. And then the second setup, which hit perfectly to our target, didn't quite go to our area of interest. But if I'm executing to perfection, I understand that this is a 15-minute level of demand here. That this is so big only because we had news and the 4-hour candle closed bearish. So I should be looking anywhere within this range or up here. So anywhere within this range for a change of character, and then if price gets to the premium zone, then we just go ahead and execute off the first bearish candle that taps into that area, and then look to target the low. Easy ass week, but areas of improvement on where we can do better. And I'm not here to try to be perfect or anything like that, or to portray that I'm perfect. I make mistakes all the time, but as long as I'm able to learn from these mistakes, and it's not like I had a bad week. We're up $1,000 on the week. I don't know, to you that might not be anything, but it also might be like, oh man, $1,000 on a rough week is not bad. You feel me? So, we have upwards of about, if we execute on today's trade, that'll give us about another 1-to-4. I'll take that at a 1% risk, so that gives us another 4,000. So we had about $15,000 of potential in this week, and we only make $1,000. So that's what I mean by I haven't executed to the full potential for a full week, a full 5 days in a row. We execute perfectly for each session, and what I mean perfectly is I don't mean that every trade was correct, but I mean that we enter every trade based off of our system correctly, and then we just see what it does. And trust me, the system works. So if you're able to execute a perfect week, you will see a ton of profit in that week. You just gotta, you gotta understand what it is that you're looking for. The checklist. You gotta go through the checklist, and then you gotta execute. So that is it for this session. I've probably been sitting here talking to myself for the past hour and some change, but that's okay. And I'll see you guys tomorrow. We'll be trading tomorrow, and that'll be what it is. Catch you guys tomorrow.